Wednesday, July 25th, 2018, Monaco 64, home of alternative economics and contrarian views. I want to talk about central banks today and how they're helping each other out and how they have no way out of the, in some cases, multi-decade policy of manipulating interest rates, of printing money out of thin air to keep interest rates low. And you might ask, why multi-decade? Well, the Bank of Japan has been doing it since the early 90s, and the Japanese economy has not recovered to its, how can I say, pre-1990 boom that we saw, post-World War boom. I know the demographics in Japan aren't great, but Japan used to be criticized in the beginning of the 90s. I remember, excuse me, listening to commentators back then, economists, especially Americans, saying Japan needs to let the markets do their job. They're going to create zombie banks. Sounds familiar, right? So I'm going to talk about that. Recently, we've had some kind of move in the market because of speculation about what the Bank of Japan is going to do at its meeting, which is next Monday and Tuesday, right? It's a policy meeting. Before that, of course, I'm going to look at the market, see what they're doing this morning. It's around 8:30 a.m. London. Billy is back. He's been, yeah, he's getting older, so sometimes he's still asleep upstairs. Don't feel like waking him up, but this morning he got up, so here he is. So let's see what we're doing. Gold right now, surprisingly, was up this morning. It's been frustrating recently with the precious metals. But yeah, and the markets seem to be in the doldrums. You know, stocks are staying steady. Bonds did spike a couple of days ago. They're a little higher yields. But all in all, things seem to be going just smoothly, and I think that's why, people, maybe that's why I'm getting a little less views on my videos, even though the subscribership is going up. But all in all, yeah, you see things moving and then they stop. Like a few weeks ago, crude was spiking higher, breaking out, and then it came off. Now it's going back up a little bit. So things are just right. Probably central bankers love it, and the powers that be. Nothing too extreme, right? So yeah, this morning, right now, we're at 1226.90, up $2.50 in gold. The low has been 1223, and the high is 1228.30. So the low last week at 1212 is still the recent low. So that's the key level below to watch for, I would say. Above, we need to get back probably above 1250. That's the key level, just a psychological level there to get through. Silver 1550, up 5 cents, outperforming slightly. Outperformed gold quite a bit yesterday, not so much today. The Dow this morning is up 10, 25,246, and I had a look at the Dow chart. Yeah, I mean, the key level to keep an eye on right now is around 25,400, 25,500. There are some recent important lows. The beginning of June, the beginning of June high was around 25,400. And also the high in the 12th of March was 25,500. So we're approaching some key levels in the stock market. S&P is down 2 this morning, 28.17. NASDAQ is unchanged. Currencies. So the pound is up a little bit, up 23 pips, 131.68. And the euro still stuck around that 117 level, not doing so much this morning, up 7. Same for the dollar versus the yen. The dollar is unchanged at 111.21. So as you see, fairly quiet right now. The dollar versus the yuan Dollar's actually down 1/3%, so it's corrected back down a little bit. And crude oil is picking back up, is trading back towards the 69 level. Right now we're at 68.50, up 1/3%. Brent crude is still fairly elevated, is at 74.42, up almost 1% this morning, Brent crude. And yield-wise, the 10-year yield got up to 2.97 yesterday, almost up to that 3% level, and it's now drifted back to 2.94. So that's what's going on there. So what about the Bank of Japan? Well, maybe some of you know Japan had a massive stock market bubble, property bubble in the 1980s. There was, you know, they were buying, it was all the rage, everything was Japan, Japan, Japan. The United States, Europe, they were looking to Japan for leadership on how to be so successful. At one point, it was said that the Royal Palace grounds in Tokyo was worth more than all the real estate in California. That's how bubbly it got. And the Nikkei got up to like just under 40,000. You know, and to give you an example, right now, let's see where the Nikkei is. Nikkei is 22,000, right? So that's what, almost 30, yeah, is it 20, 30, almost 30 years later, it's all, you know, it hasn't recovered back to that high of almost 40,000. That's the Nikkei in Japan, right? And I always remember I was already working in the markets in the early 90s, and even in the late 80s I did some internship here in London, and I remember people, I think it was in 1990 and the Nikkei had topped already. Some people probably thought it was just a temporary top, but I remember doing the place where I worked, they were trading all of these Nikkei put warrants. They were all the rage, people buying Nikkei put warrants. Warrants are just like options, but more longer term, and they're issued over the counter by institutions like investment banks. And I remember that a lot of the clients of this place I did the internship at, they were trading those things, and I was putting them through the system. I was learning through, they did Euro bonds as well, bond markets. And I had to help clear all those things. And I remember the Nikkei put warrants. They were really popular. It was probably a great thing to buy. And then some people did buy them just around the top at 39,000, 40,000 in the Nikkei. And then everything came down, right? I mean, the worst, I think, was back in the mid-90s. I think the Nikkei got down to almost 6,000. It has recovered from those lows quite a bit, but it's still below those highs. But I always remember, because the Japanese, how can I say, powers that be, central bank, politicians, they wanted to keep things from imploding, so they bailed out all the major banks. And it's been a long process. A lot of these banks don't exist anymore because they merged, but the word zombie bank comes from that period in the 90s. And I always remember even the Keynesian commentators, economists in the West, in the US, in the UK, kept going on about how Japan was doing all the wrong things, that it was a cultural thing, that they didn't want to admit failure, so they bailed everyone out, and that was the wrong thing to do. And lo and behold, 20 years later, we did the same thing in 08. So that's the lesson to be learned from Japan. The other thing is about central banks and how this policy that they've been conducting, especially the Bank of Japan, is so, it's destroyed all the free market signals. It's created really bad habits. And if you try to get out of it, it's almost impossible. And that's why there is, even though the Fed supposedly now is raising interest rates and doing quantitative tightening, they're doing it very slowly, and the other central banks are doing the opposite, and they're all working together, right, to nullify that, because the Fed has no way out. It's like a heroin addict, right? It's really hard to get out of it. And just to give you an idea, the Japanese bond market is the second biggest in the world after the US. And right now, the 10-year yield in Japan is 7 basis points. Yes, not 7%, but less than 0.1%, 0.07%. And on Monday, according to the, and I'm reading here from the FT, there's an article that actually came out a few hours ago, and it says why even a tweak from the BOJ can shake global markets. And why the global markets? Well, because this policy in Japan of money printing, of trying to keep their currency really weak, coupled with the fact that it's a convertible currency, the Japanese yen, and the markets there are very liquid, big economy, has created what's called the yen carry trade. And what is the yen carry trade? Well, it's when Japanese investors, foreign investors, non-Japanese investors, speculators, that's when they borrow in yen, right, to buy assets that give bigger returns, like treasuries, which are almost 3%, or commodities or anything. So to borrow the yen, they basically go in the FX market and they sell the yen and buy, let's say, the dollar or the pound or the euro. Then they take those funds and speculate with them to try to get high returns. And they've been doing well because the policy of the Bank of Japan is always to cheapen their currency and keep rates at 0 or negative. So it's free money for the speculators. But if, like, the FT is saying, on Monday, late last week and on Monday, there's talk about that they might actually do something a little more drastic, and all the yields everywhere spiked massively. Even the 10-year, which I was talking yesterday, spiked from 285 to 297 yesterday. So what does it say here, the article? It says, the July 31st meeting of the BOJ, which I talked about earlier in the video, was sitting on the calendar as an interesting event for markets. Important because it is Japan, but nothing too white-knuckled. The perception began to be challenged late last week after several reports suggested that policymakers were mulling some tweak to the central bank's monetary stimulus, most likely in an effort to alleviate the side effects of the current easing on Japan's visibly strained banking sector. Well, that banking sector has been zombied and strained for 30 years almost. A surge in Japanese bond yields rippled out to US and European markets. There you go. That's the carry trade, where Japanese investors have turned in recent years, and it's not only Japanese investors, but that's what the FT is saying, in recent years in an effort to escape the measly returns available domestically. Although that initial reaction had played itself out by Tuesday or yesterday, next week's meeting has now become a global must-watch, as investors try to work out how deeply within the BOJ runs the feeling that it's stimulus, which includes a yield curve control measure, or YCC they call it. That's such a euphemism for basically killing the market and manipulating the bond market. The Japanese bond market is almost dead, by the way. There's nothing going on there. Designed to keep the yield on the benchmark 10-year bond close to 0%. So right now, the Japanese 10-year yield is at 0.06. So and it's up 0.04 in the last month. So the BOJ is probably not very happy. So it'll be interesting to follow what they do next week. Early next week, Tuesday, is when the results should come out. And it says so yield YCC measure designed to keep the yield at 0 is unsustainable. The market reaction is a reminder of the role the BOJ has had in anchoring global bond yields. So there you go. that's the whole story I've been talking about of the Japanese yen carry trade. So that's why we need to look at these things, not just the U.S. Treasury yield in isolation, or the UK gilt yields in isolation. We need to keep an eye on Japan, and it also proves how these central banks have totally disrupted things. Things are not real anymore, unfortunately. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on DTube, Steemit, and on Twitter. And yeah, I'll talk to you later. Take care. Bye.